All right. Thanks a lot for that, Rajat. Let us invite our other experts as well. SP Tulsian and Mayuresh Joshi of Angel Broking have also joined into the conversation. Good morning, Mr. Tulsian and Mayuresh. Mr. Tulsian, we spoke with you at length about Reliance, but you still think that we could, at any dips today, you would recommend a buy on the stock. You were very positive on the numbers.
See, Lata, yesterday also I said that I'm not taking an intraday call, because I gave my target of closure to about 1100 for this January series, because if you see the momentum which we have seen in the stock continuing, except for Monday, which was expected that ahead of the results, you will be seeing some cautious profit booking coming in, which came, and that has made the counter very healthy, number one. Number two, if you really see yesterday also I expressed my view that sometimes I'm unable to understand the reason for expectation of a 26% growth in refining on QOQ basis. This looks bizarre. I have not seen those kind of estimates. Sometimes I wonder whether that was on a YOY basis or on a QOQ basis. I don't think that sanity really prevails. You have seen 1,000. I'm using those harsh words, because company has seen operating at 116% capacity utilization. That was not factored in by any of the analysts, while giving those estimates. And still, if we are expecting 26% growth in refining, that too when the crude is, ruling at around maybe $30-32 during that Q3 period, or not beyond $35. So I'm unable to take those estimates into consideration or into for while factoring into the share price. So I continue to have, because the momentum which we have seen in the stock is not going to go down or die down till the January expiry, and January expiry will be seen quite positive. I'm not taking an intraday view. You may have some, this is exactly like the Asian Paints. We have seen very good numbers, but yesterday the stock was weak. That does not mean that you take a intraday call and take a negative call on the stock. So yes, I continue with my positive view on Reliance Industries, and still I maintain closure to 1100 rupees in this January series. Yeah.
In fact, the earnings season so far has been quite good for a lot of the large caps, I must say that, whether it's Reliance, whether it's Infosys, Kotak Mahindra Bank, Z Entertainment, and of course the cherry on the cake was Asian Paints that delivered a stellar set of numbers. In fact, Menka Joshi has been catching up with a lot of the biggest voices from the world of business. She did speak with KBS Anand, the MD and CEO of Asian Paints. He said the sharp fall in crude prices will help the margins or may have helped the margins in the third quarter, but the demand picture doesn't look very different. Listen into a slice of that conversation. We'll play a larger bit of that conversation later in the show as well.
At the moment, we don't see demand very different from what it has been in 2015. You have to decipher whether that is good or bad. Consumer demand has varied across the country. It's the south has naturally been affected, especially in the last quarter, because of the heavy rains in Chennai and rains also in Karnataka, Kerala, coastal Andhra, etc. But the north, east have been good. India is like all of Europe. You'll always have some bad spots, some good spots. So it sort of evens out. You can say we are cautiously optimistic, or so to speak, whatever that means.
If I remember correctly, that's what you told me last year as well.
So the year hasn't been very different. It's been good from the margin point of view, frankly, because raw material and commodity prices have fallen considerably, more than we anticipated. We hope that trend continues. But in terms of overall demand growth, plus minus 1% here, there between last year, this year is not very drastically different.
Okay, so cautiously optimistic, but that's a very interesting conversation, and you can catch all of that at 9:40 later today. So do
very important takeaways. One, that the demand has not improved. I mean, Asian Paints stellar numbers, but he says 1% here and there was about all to speak about the demand. And later on in the conversation, he also said that this is about the best margins we can. We can't do better than this, so even if commodity prices remain sober. So those are sober comments that came from Mr. Anand.
All right. In fact, let's toss this question to Mayuresh Joshi. Mayuresh, the management is not very optimistic going ahead in terms of demand at least, but the numbers have been really good this time. For an investor who holds Asian Paints, what should the strategy be? Should you continue to accumulate at lower levels?
Morning, Sonia. Clearly, I think the numbers have been good in terms of how the margins have panned out and how the volume growth was. But clearly, I think let's understand the picture very clearly. The margin expansion was more to do with the fall in input costs, and that has been a general trend for most commodity-driven companies who use input costs, whether in terms of crude oil derivatives or titanium dioxide. Clearly, I think if you talk about the industry as a whole, when you're talking about paints, it moves at 1.5 times the real GDP growth. So if one really assumes volumes to be at around 11-12%, it is quite possible, if one goes by the IMF estimates, that they've probably come out with India for 2016-17. Will that translate into revenue growth? Probably it depends on 2-3 other factors as well. How the repainting demand is coming back, what happens on the rural side. And yes, Asian Paints is a market leader, so I think I won't mind sticking out with the market leader even in these markets, even though the valuations probably appear as headwinds for the stock from an accumulative time point of view. So clearly, I think investors holding on to stock should continue holding. Numbers might differ quarter on quarter, but clearly I think the trend, if one really assumes growth to come back over the next few quarters, Asian Paints growth would be very much there in the higher teens.
Okay, well, I must point out that it's quite a brutal sell-off that we're seeing in Asia right now. All indices are at the lowest point. Hong Kong is almost 700 points down at this juncture. 3.5% gone on Hong Kong, 670 points. As you can see, the Nikkei market is almost 400 points gone as well. So it looks like it's going to be quite a tough start to trade. SGX Nifty is threatening to break 73.50.
Taiwan used to be a little bit of an island of stability. Today, Taiwan is as well down 1.5%, Kospi down to over 2%, and as you pointed out, the bigger boys, Hang Seng and Nikkei, brutally down. So this is not looking like a very happy start at all for our trading day, but that also opens short trading ideas. Here are some trading ideas in our segment Super 6. We'll take a breather and be back.
Calls coming in. We'll take a short break, but when we come back, we'll be just in time for the pre-opening rate. Stay tuned.
We have this colossal debt bubble in China, and in my opinion, this will have to be deflated through either huge losses in the banking sector or losses in the bond market for investors. In addition to that, we had essentially a stock market bubble, which now is being deflated.
I've been telling you how most Asian markets are under quite a bit of pressure, and the Dow futures are also indicating in early trends that perhaps the start in the US market could be quite weak. So brace yourselves for a lot of turbulence today. But we have 1.5 more minutes to go, so let's get some views out of the way. Mr. Tulsian, morning. AB Novo is the stock that everyone will look at today post the demerger. I just wanted to know, at what price do you think the residual business could list, and how do shareholders approach it?
See, Sonia, if you go by the price trend which we have seen yesterday, AB Novo should list somewhere between maybe 975 to 995, maybe sub 1,000. That's the level. Because if you knock out the value of the Pantaloon Fashion Retail, which will be received by one share, that is 5.2 shares of Pantaloon Retail, that gives a value of closer to about 1100 rupees. So if I just, and the closing price was 2065, but mind it, yesterday the share price of AB Novo went up very high, largely to take the advantage of the tax benefits of the residual value and all that. I won't explain that in detail. So I won't be seeing the price of maybe beyond 975. In fact, though I'm expecting it to be anywhere between 950 to 990, but I will be expecting it because of the lower market bias also. Take 975 as the idealistic rate for AB Novo.
Okay, we will also discuss the Pantaloon Fashion valuation, but that after a few seconds. We are just about to see the pre-opening rates, and the SGX Nifty is not giving us a very good cue at all. 1.25% down on that, but that's a futures index. Let's see where the spot opens. 7423. Okay, still holding out. The first trades are not all that bad. Both of them have come in in the green. We shouldn't take too much from the rupee, but today you will expect emerging market currencies as well to be seeing a bit of pain. We saw 99 on the DXY, that is the Dollar Asia Index. So the rupee may see a little bit of pain, but that obviously is not the biggest worry for anybody. Yes, there it is. It is weak. 67.78. So that's a good 20 pies. Okay, now 83. The rupee is approaching the 68 mark. This is clearly an indication of weakness. The weakest level that we have seen since September the 3rd. September the 3rd, we saw 68 intraday. So until it reaches there, we would still be lowest since September 3rd, 2013. The weakness in the rupee is telling. It's the most stable asset in the emerging market basket. But if you can see weakness there, you should expect more of that in the equity space as well. Reliance is starting off with a green tick in the pre-opening bids. Those were much above expectation numbers as far as the net profit was concerned. It is another matter that some people may squabble about the refining margins being not as good as they thought, and some bit of money coming in from other income. But all said and done, it was a sterling profit of 7,290 for the consolidated entity and 7,218 for the standalone, and that pre-opening number is looking very good. Usual disclaimers, Reliance owns the company that owns CNBC TV 18 channel that you are watching. Now Reliance taking higher, but the rest of the market is not in a very good space. Just about all the other stocks are indicating a red tick. No point reading them because they're pretty wavered. A minute ago ACC was down about 8%, now it is down much less, maybe 1% or so. It's still very wavered, so let's wait by and not read out rates.
Yes, Lata, you're right. Just a couple of stocks maybe you'd want to watch for Zensar, because that reported quite a disappointing set of numbers where the dollar revenues have actually fallen for Zensar. So that stock is down about 4%, and there is some indications of profit taking that you're seeing. But you know what, our guests have identified quite a bit of fundamental ideas for us. So let's go straight to them. Mr. Tulsian, the stock that you have identified for us today is called Podar Pigments. Just take us through that story and what the long-term target price could be.
See, Sonia, they are the makers of the master batches, and in fact, if you see, they are the company who is the first in India to make master batches for dop dyeing of polypropylene, nylon and polyester multifilament yarn. And this has applications in all, whether you talk of engineering components, paper, plastic and packaging and man-made fiber. And yesterday, in fact, they came out with their numbers, Q3 numbers, and company always is quite early in declaring their Q3 numbers. And if I go by their 9 months performance, they have a top line of closer to 240 crore. Operating profit is closer to about 15 crore with a PAT of about 13 crore. That translates into an EPS of 12 rupees. If you see, this 12 rupees practically has given a rise of maybe about 2 to 3% on a QOQ basis. If you see, maybe third quarter has a EPS of 4 rupees 40 paise. So FY15 EPS was at about 15 rupees 30 paise. I am expecting that probably FY16 will end with an EPS of 17 rupees. That means giving a growth of about 10%. So maybe next year FY16, FY17, because of the drop in the polymer prices and all that, the demand of the plastic packaging and all products are going up. They have the good presence in the automobile or maybe in the defense, electrical switches, where these master batches are used. As I said, that they are the first in the country to make the DOP master batches. So taking all this into consideration, again, if you see, it's a debt-free company, cash of about 15 crore rupees lying with the company on a net worth of 110 crore. The share is now ruling at a P of closer to about 10 times, which looks quite reasonable for any master batch. If you take the comparable peers like maybe Plasti Blend, which is ruling at a P multiple of 14. Okay. So I find maybe a rise of about 25% in next 6 months, and one can take a target of 190 on the stock.
All right, thank you very much for that, Mr. Tulsian. But all these buys, remember, are coming in a market which is not in a mood for good news. Hang Seng, as the flash is pointing out, is at its lowest level since June 2012. Now, that's a seminal fall that we are seeing. Nikkei has fallen to its lowest intraday level since a year. So it's a 52-week low that Nikkei has registered. Hang Seng falls to some 3-year lows, 3.5-year lows. So this risk aversion that we are seeing across the world in commodities and in equities is something that India cannot escape, and we are going to see that seeing a lot of our stocks taking it on the chin at this point in time. The Nifty is indicating that it will open well below 7,400, 7,376 as I speak. So it does look like there is going to be some fair amount of brutal selling. So Darshan, what do you do? Just step aside, or if there is a gap down opening, still short?
No, let's assume there will be a gap down opening. You take short positions again, and these are not day trading positions because that will be difficult to predict. You take positional shorts using 7,400 put options for February and 15,000 put options for the bank, for the Nifty bank, both February strikes. This is my assumption is that this decline will not end today, and we really want to give it more time. If we are short-term traders, to get a profit, we should.
Okay, so this decline will not end today. 73.36, remember, is a recent low of the Nifty. So all eyes will be on that sacrosanct level, 73.36. For now, the Nifty is indicating that it could be a slide of 1%. But Mayuresh, same question to you with regards to a lot of the big earnings that came out. Good numbers from the likes of Asian Paints, Reliance, Kotak Bank, Z Entertainment and Infosys. What would your pick of the lot be?
So clearly, Sonia, I think Reliance has given a stellar performance in my opinion, and again I think with new capacity is expected to come through over the next few quarters. Our own take is that the margin improvement will be quite significant. So clearly I think Reliance remains one of our top picks for 2016. Clearly I think out of the other lot, I think as mentioned earlier, I think Asian Paints valuations appear to be headwinds for the stock, and clearly I think one really needs to understand the volume pattern happening, and it grows at least in pace as the Indian GDP grows. But what happens with the repainting demand, the rural discretionary spending are factors to be watched out for over the next few months. Z came out with an exceptional set of numbers in my opinion, but again I think the market is in no mood, and clearly if one really assumes advertising revenues to probably grow in a pace of around 20 to 23%, subscription to grow tad bit lower at around 10-11%. You're still seeing, I think, decent performance happening both on the top line, EBITDA margins probably expanding, and clearly if one accounts for content costs probably staying high from FY17, you're still seeing that Z can post good set of numbers over a 2-year time period. So if I have to pick and choose, I think Reliance is something that we probably like at this juncture. Z on declines in a staggered manner is something that we like, and a disclaimer, I think we might be owning these stocks in our portfolio schemes.
Yep. Thanks for that disclosure, but the markets are in a very bad mood. It's 1% knocked off the Nifty. 50 on 50 stocks are in the red. I saw BPCL with a shade of green, but even that has disappeared now. Bosch tried to edge into the green, and these are just bids, mind you. They're not trades, but even over here, you're seeing the market in an extremely somber and pessimistic mood. After such a sterling set of numbers, Asian Paints just didn't make it to the green. It's down now about 60 rupees from just recent highs. It touched very close to 900, I think 880 or thereabouts very recently, a few days before, and look at the way the market has taken away money, even where it is making money. In fact, that's what's happening. People are taking away money where there is profit preservation deals across the board. Let's get someone who tracks the entire Asian space very closely. Michael Avery of Rabobank joins us. Michael, this is almost manic selling that we are seeing in Hong Kong, in the Nikkei. Are you seeing some kind of a cathartic selling and an end to it at all, or are we still going to see a lot more?
Well, I've said repeatedly on your channel that I don't see any upside for equities near term. You can get a bounce, you can have one good day, you can have 2 good days, but the fundamental factors that are dragging the market down are not going to be resolved today, tomorrow, next week or next month. They are deeply problematic structural factors that have been sitting there for year after year building up, and we need to at some point try and address them. But doing that will be negative for equities, and not doing it will be negative for equities. So unfortunately, yes, there's more pain to come. It's not going to be cathartic yet.
Okay, there's more pain to come. Michael, you have been saying repeatedly that one should preserve their capital and not invest into equity markets across the globe for the time being. But what should the investment strategy be then? Does the fixed income market look good? Do bonds look good? Does gold look like a better opportunity? Or is cash the best place to be now?
Well, I think all of them are good options depending on which particular market you're looking at. I think government bonds in a deflationary environment are going to continue to perform quite well. Obviously you've got a currency effect depending on which particular government bond you choose, but if you look at your own domestic government bonds, there's certainly attractive yields there. At the same time, gold, well, some people like that. I find you can't eat it and it's heavy to carry around with you, but if you want to wear some of your wealth around your neck, why not? Provided you keep a careful watch over your shoulder so no one grabs it. And in terms of cash, well, it depends how much you've got. It's kind of expensive and risky to have it under the bed, but money market funds that offer something quite safe at the very, very short end of the curve might be something that you might consider. Sadly, I know none of these are particularly high-yielding or exciting in the long run, but sometimes it's the more prudent thing to do.
Okay. Do you see, while I take your point that people will be too brave to buy, won't be brave enough to buy at this juncture any of the risk assets, where do you see the end of the selling, at least in terms of time or in terms of level, say for the Indian market or for the Hong Kong market?
Well, that's a very difficult question. I mean, both the level and the time are two different things, but they obviously reflect, as I said, these underlying fundamentals. That's the far more important thing. It's impossible to, in isolation, and I defy any analyst who comes on your show looking particularly at the Indian market and say the bottom of the market is here, here or here. That's rubbish. You cannot possibly call that unless you understand what's going on with the global backdrop. So if they can tell you exactly how the Chinese situation is going to resolve itself, exactly how these global currency wars are going to resolve themselves, exactly what the central bank stance from the Fed and all the other central banks will be going forward, and how we deal with the overhang of global debt right the way around the world that Mr. William White from the OECD was talking about this morning.
Yes.
Until they can tell you how we deal with that global picture, frankly, they are just talking rubbish if they can pinpoint any point in the market and say that's a buying spot.
All right, so before we let you go, Michael, what is your own view on whether the next recession is on the way, a global recession, I mean, led by the collapse in crude and, the issues in China?
It's definitely a risk. I wouldn't want to say it's 100% arrived yet. The market's obviously pricing for it. But when we say global recession, some countries do continue to grow through that. For example, India would still grow in real and nominal terms. So would China. They wouldn't fall year on year. But overall, we consider it a global recession if growth drops to a low enough level that, it hurts everyone. And I do think there's a considerable risk of that going forward. And we need to have policymakers with their eye on the ball. At the moment, they're not even looking at the ball.
All right, Michael, we'll leave it at that. That's a useful warning at a time when the markets are not doing too well at all. Thanks a lot for joining us. Prakash, 7357. I think your number is approaching. I think you said 7356 thereabouts. So you will start shorting at this level?
7356, 7313 are strong support zones. We'll have to watch here. For a couple of days trade, these are the buying points, I would say. I don't think this will breach 7313. Very, very strong support. Yeah, but if 7313 also goes, then it's still short. Actually, if you see from a trading angle, I would say that as long as 7450 is not taken out, we must assume it's down.
Okay. That's Prakash's view. The markets at this point in time indicating that they might open at about that 7357 level. Sudarshan, you are sticking with any of the buys? All the Nifty stocks are in the red.
Well, these are short-term buys. At this point, there is no harm in considering them. Wait patiently for the markets to stabilize. What we are talking about are good quality stocks, Marico. I mean good quality in the current context where there is an intraday bounce possible. In this market, buying should always be done with caution, but I would stick with them. After 10 a.m., anything could happen in this market.
Okay. How would you trade an intraday bounce?
Oh, I wouldn't trade an intraday bounce in the Nifty and the Bank Nifty at all. My positional shorts would be instated in both these counters. The intraday rallies would be very difficult to trade. Only stock-specific rallies should be taken.
Mayuresh, a word on Axis Bank before the market opens. What's the expectation today?
So clearly, Sonia, expecting an 18 to 20% credit growth, you're probably looking at a 13% NII growth taking place. The provisions will be a tad bit higher, and even on the GNPA side, we're expecting around 1.5 by 1.6% in terms of percentage. Clearly, in terms of NIMs, you're expecting a 10 bips compression because of the 35 bips base rate cut that took place in early October. But clearly, I think the point we watched out for is what happens with the restructuring book, 525, NERC sales. I think those are the more important pertinent points to be watched out in the numbers.
Okay. Will you short it before the markets, before the results come in at all, Mayuresh? Or at least remove your longs? Okay. I'm sorry, there goes the bell. So we'll come back to you with questions after we just go through the opening trades. The market's rapidly slipping, opened 1% below at around that 7355 mark, still stays there, 7353 as I speak. Well, there are dots of green on the screen, you will have to say. So let me just read those one or two shares. Bharti, Infosys were trying to be in the green. Bharti is at this point in time. But Reliance is the one I would watch out for. People have chosen to look at that big number as a reason to sell, and 2.74 down. So that's a sizable amount of profit creaming that's coming into a stock that has delivered so well. So whether it is Asian Paints or whether it is Reliance or whether it was HCL Technologies, good numbers are seen as an excuse to take money off the table. Bigger losses coming in the likes of Cain, which are obviously impacted by a $27 crude price. Other metals which have also capitulated globally. Vedanta is down 4%, also of course related to Cain's woes. PNB, then come the banks. PNB, Bank of Baroda, both of them are down 3.5%, 3.7% as I speak. SBI, the big boy, is down to 178 rupees. 5 rupees knocked off. That stock is down 3%. So brutal has been the selling in the banking space. Then comes ICICI Bank, 2.5 down. Axis Bank, 2.4 down. That saw a tall 6% rally yesterday. About half of that has already been creamed off in the first minutes of trade or seconds of trade. M&M selling off 4% down. PNB now is down 4%. It's an 88 rupees stock, PNB, the second largest stock in terms, second largest bank in terms of deposits, is down to 88 rupees. That's some bit of selling that you've seen. Available for a few thousand crores, that entire bank, in terms of market cap, Punjab National Bank. Idea Cellular down 3%, BHEL down 3%, L&T down almost 3%, ONGC down 2.5%, just about holding out. Asian Paints down a further 1.6%, so 832 is where it stands, 60 rupees shaved off after the numbers. Reliance down 1.4 now, some bit of short covering coming in Reliance. IndusInd Bank is down 1.6, HDFC down 1.4, HDFC Bank down 1.4, sorry, HUL down 1%, ACC down 1%, no, nothing is in the green. BPCL alone about 0.2, about 1 rupee higher than yesterday, otherwise 49 on 50 in the red.
Oh yes, very bad, very weak opening for the markets. You know, you were talking about the good numbers seeing a sell-off. Forget about that. If you've had the bad numbers in this market, you're just getting thrashed. Look at some of the names. Zensar Technologies down 10% post a weak set of numbers. BASF, Pipavav Defense, a couple of other stocks that have reported weak numbers, and those stocks are just getting hit hard quite a bit, about 4 to 10% apiece. A lot of non-index large caps continue to sell off, a theme that we pointed out yesterday as well. So Bharat Forge, Alembic, Himmat Singh Ka Seed once again have resumed their downtrend. On the upside, there's not much to talk about at all. Maybe Triveni Turbine, that's not selling off. It had a good quarter, but it's not seeing any green tick, but it's not selling off either. A couple of these fertilizer names are okay. NFL, FACT are trading a tad bit in the green, but look at the market breadth. 1:11 now in favor of the declines, and a whole host of stocks, you know, banks, IDBI Bank, railway stocks, Titagarh Wagons, metal stocks, JSPL, Lanco Infratech, HFCL, JP Associates, Syntex, all these stocks are down about 3 to 6%. Quite a weak opening. In fact, Anuj is also with us. Anuj, you know, pretty much on expected lines. In fact, you were telling us about that 73.36 level that one should watch closely, which was the recent close, and that has gone as well in just moments of trade.
Yeah, and I think that is the most disappointing aspect of trade, because that's telling you that this is a market in which, you know, all rallies are now selling opportunities. And anyway, this is a market in which rallies should be used to just, you know, correct your portfolio and exit out of some of the rank bad quality stocks which ran up. You know, a case in point is what's happening to Morpen Labs, for example, over the last few days. It's now down 44% in a matter of a week or so. And this is, you know, what Prashant Jain was referring to, that exit doors will be slammed in some of the small caps now. And on days like yesterday, when things look good, are the days when you should actually say, okay, let me just use that as an opportunity and raise cash levels and then at some point when the market stabilizes, you can use that to buy. The fact that 73.36 has been taken out so effortlessly is telling you that we could be in for a long day. If the market has to bounce, it has to bounce from here. Otherwise, you're looking for a really ugly day.
Yes, Prakash's 7313 is almost here. We did 7318, Prakash. It's just about holding at 7318, 7320. You'd be a brave man to buy here, are you?
As an aggressive trader, one could buy here, but I would say that this is the good place to turn around if it has to. Expansion and contraction. This is expanded here. Now, if the market is to turn around, this is a beautiful place. But only thing is, I need to see boots on the ground. Needs to correct. The price has to somehow confirm it. The place is right, but the price has to confirm it.
Okay, Bank Nifty is way down 14,961.
Oh yes, and Nigel points out an interesting statistics. He said watch out for 72.95 on the Nifty. If that gets broken, that of course is about I think 50-60 points from here. If it gets broken, then that will be a 20% correction from the all-time peak, and as we know, 20% is the classic definition of a bear market. So in a sense, Anuj, this, of course, a lot of stocks have been in bear markets of their own, but now we will sort of, as per the classic definition, be in a bear market.
Yeah, but
all within 10 months.
Yeah, but the classic definition normally is for US markets and developed markets, where we don't see big runs as well. The likes of run that we saw, for example, 2 years back in Indian market. In Indian market, you'd sort of define this by 30%. But time-wise, we are already in a bear market. I mean, let's make no mistake about that. It's, the market made a peak in January last year. The Bank Nifty, the Nifty made a peak in March, and you've had, this is far from a bull market correction, at least for the large caps. The large caps have been in a bear market. 42 Nifty stocks are below 200-day moving average out of 50 stocks. So the problem is not the Nifty and the large caps. The problem still remains, as I said, in the small caps, the ultra small caps. That's something that you'll be watching out for, where you had seen some big gains. In fact, let's look at the circuit summary as shall we on the BSE at this point in time. The opening circuit summary, you have 76 stocks on the lower circuit already on the BSE. Let's watch out for that. My sense is that will go up today to about 200 to 300 easily.
So more and more people unable to get out and getting trapped in several of these stocks. 76 already. Let me read the very bad advanced declines ratio. On the BSE, it is 12 stocks plus in the red for 1 in the green, and on the NSE it is 11.5 stocks in the red for 1 in the green. It's a brutal cut actually in the Bank Nifty. It's down 2.23%, distance away from 15,000. 7313 is gone, Prakash. 7310, 7309, 7308, all of those have gotten traded. So markets are not respecting any levels at this point in time. Sudarshan, Bank Nifty below 15,000. I don't know how many people would have got a chance to even short it at 15,000, but at 14,950, would you still short?
Oh yeah, absolutely. I just want to qualify this. You are buying put options for February. It's still a short sale. There's no confusion on that. I just wanted to clarify on the instrument, because that puts you ahead of the volatility that could come in. But yes, at current levels, the Bank Nifty and the Nifty as short sales, I have given targets of 6,800, 6,900 for the Bank Nifty earlier. There's no sense in repeating it. There's more downside here.
Well, we are going on like a broken record, but there is complete capitulation in the Asian markets as well, and one should point that out again. The Hong Kong market is now almost 730 points gone. The Nikkei market is gone 500 points. So it's not just us. All across the globe, there is a lot of blood on the street, as you can see, and that seems to be, the reason why our markets are spooked so early in trade.
Just one more point, Sonia, on that. This is a market in which the global equity markets have changed all of a sudden. The last fortnight, there's something wrong with global equity markets. You don't know where that is going to stop. So this is not a market in which you want to be brave. This is a market in which you have to respect the screen. The screen and the data is telling you that this is something really bad going on globally, and where do you know it's going to stop? If you go by the options data, the strikes of even 6,900 are very active right now on the Nifty. So there's quite a bit of fear in the market, but the last phase of bottoming out process normally is the most brutal one, and we could be going through that right now.
Okay. No, I actually, that's the right point to say. You hit the nail on the head, Anuj. There is no point dissecting this and saying, but the Chinese GDP data didn't come all that bad, but the Chinese yuan has been appreciating, and the PBOC has been extremely responsible in doing its bit. No, this market is determined to sell. Rupee is very close to that 68 rupees per dollar mark. As you can see, one of the stabler elements, excellent current account deficit numbers. It will be below 1% probably this year, but that's not the point. The point is that you're going to sell wherever there is money.
Asian Paints is down 5% after reporting. What a spectacular set of numbers.
Yes.
You know, what more proof can you ask for that this market is in for a bit for trouble?
Actually, 60 rupees since the moment it announced numbers, which is not justified at all. But that's the market. Profit preservation, move into cash seems to be the dictum that investors and traders are following at this point in time. No, I guess traders are following another dictum: make money in the short side, and looks like there is still money to be made. 7307. We are very close to the 7,300 mark, and to Nigel's point of the 20% retracement.
Even if you go by 30%, I mean, if you look at the Bank Nifty, he tells us that the all-time peak of the Bank Nifty was 20,900. So now we're almost 30% from the top. So banks are clearly in a bear market, and that's something that we've pointed out several times in the past. The PSU Bank Index is now down 25% just in 1 month of this year. Only in January, the PSU Bank Index has lost 25%. Prakash Gaba, come in on this. You know, you have been unequivocally bearish on this market for a long time. At this point, does it make sense to short any banks, or, you know, now most of the money, easy money, has been made on the short side?
I think the target that I've given on the bank is around 14,637. It's going to go there. So do we short here? Of course we short here. Only thing is we need to have higher stops here, because you need sometimes some kind of volatility to be taken care of. You don't want to be stopped out, be right and be stopped out. Only thing is stops needs to be higher. Even Nifty, I would say that if it breaks 7,300, it's still down. No sign of strength. The market could not take one update. Now that's serious.
You know, 2 points. One is the PSU Bank Index. The PSU Bank Index is now exact 50% below its highs. It's halved from the last year high. It's now 50% below that. And the second point, Sonia, that I made yesterday, you know, you asked me about the bottom sign of this market, is to spend a time above a particular level. That level could be anything. That level could well be the current 7,300. It could be 7,200 or 7,100. But it's not 1 day of rally. You know, for bottom to be made, you need to spend, say, a week, 10 days, a month.
A couple of boring days.
A couple of boring days, more than a couple of boring days. You need to spend some time above a zone to see whether, you know, there's propensity to sell at that mark or not. If the propensity to sell at that mark is gone, then you say, okay, you know, you're maybe reaching there. But till the time you see these kind of days, it's really too early to talk about the bottom formation.
Rajat, anything swimming into your radar as a trade?
As a trade, you choose short positions, and still they are falling, because I have a feeling that 7295 that you are talking about, that would also be taken out. I mean, the kind of momentum that I see, and it's raid all over. I mean, you want a trade, take it in, say, State Bank. Probably in this current downswing, State Bank is headed for 160. So here, if you take a trade and put a stop loss above, say, 183, 184, positional trade till about Friday or early Monday, maybe that 160 level would be there. But I don't want to accentuate this kind of a downside momentum by giving more sell calls.
Okay.
Beyond the point, it is actually nauseating.
No, I'm not enjoying reading the numbers either. Thank you very much, Rajat Bose, for joining us. We will relieve you of that pain. Thanks a lot for joining us this morning and giving us trading ideas, but absolutely unrelenting selling. At 7307, there were 2 minutes of stoppage of selling, and it is 7319. That's the prevailing intraday low, 7307, if I'm not mistaken. We'll have to wait and see if in the first 1 hour even that is breached, but that's a level you will watch out for, Anuj.
7303.
Okay, 7303.
You know, I don't know if we are in for if you remember 2 weeks back, the kind of Thursday we had, Lata, when we kept making newer and newer intraday low. So that's something that I'll be watching out for. For now, as I said, 7303 becomes your important point to watch out for. That's the low. By 10 a.m. if that's breached, you are in for a long day.
All right, Mr. Tulsian, thank you very much for joining us. It's not a day when we can look at fundamentals because the markets are in such a bad mood. Mayuresh Joshi as well, thank you very much for joining us. We will keep the technical experts for a bit longer because the markets perhaps will still proffer trades. 7324 as I speak with you, and let's see if there is anything at all that is green in the index.